Hey everybody, Jamie Trull here, financial literacy coach and profit strategist. And I just wanted to do a quick video about PPP Second Draw loans. So this is the new information that is just coming out. We just got a new interim final rule from Treasury yesterday with some additional details really going into what was in the bill that was enacted at the end of December. So we've been waiting on a little bit of detail. We've gotten some details about that. So hopefully those portals for the second draw will be opening up soon. And I want you guys to be prepared and know whether or not you are going to qualify. So let's talk about what you need to do to make sure that you can qualify. So the first thing is, in order to qualify, you actually have to have already used all of your funds for round one, or essentially make sure that they are used before round two is ever deposited into your bank account. If you still have funds outstanding, or if you didn't use the funds the right way, you likely will not be eligible for the second round of PPP funding. Now, the second round goes all the way through March 31st, assuming that there's still funds available until then. So even if you haven't used it all now, you may, in a month from now, have used up all of your round one funding and be able to get a second round of funding. Now, also some requirements for round two to qualify. You have to have under 300 employees. It used to be 500. Now it's been taken down to 300. And you actually have to prove economic injury. So you have to actually show a reduction in gross receipts, i.e. revenue coming into your business quarter over quarter. So you would usually take one quarter of 2020 and compare it to the exact same quarter of 2019. And as long as you have a 25% or more reduction in gross receipts, that's the revenue coming into your business, then you would qualify for a second round of PPP. Now, one shortcut they've given in this new interim final rule is to say, okay, some people may not have easy access to their quarterly records. So if you can prove that the full year, 2020 versus 2019, was down at least 25%, then that will work. So for those of you who want to use things like tax returns or your full annual books and records, you can do that. But here's the thing. If you don't qualify doing the full year, that doesn't mean you wouldn't qualify on a quarter by quarter. You may actually, in some cases, have made more revenue in 2020, but still have been down one quarter of 2020 versus the same quarter in 2019. So if you don't qualify when you're looking at it from a full year perspective, then you should go and check it out from a quarter by quarter perspective. Now, it's important to say that there are special rules around how that works depending on when you started your business. So if you were in business for all of 2019 and all of 2020, then you would compare the same quarter of 2020 versus the same quarter of 2019. But there are some specialized rules if you started your business, say in Q2 of 2019 or Q4 of 2019, or even in Q1 of 2020. Remember, to get PPP, you only need to have been in business by February 15th of 2020. So there are some specialized rules on that. I've actually created a calculator. You're going to want to go to jamietrull.com/PPP calculator to grab it. I'll show it to you here at the end so you can see what it is, but it can help you figure out if you have had that 25% drop in gross receipts or not. Now, one question we had was, is this going to be cash basis? Is it going to be accrual basis? How do they figure out what your gross receipts are? Well, they have answered that within the new guidance. So basically, it's going to be based on your method of accounting. So if you file your taxes on a cash basis, you would actually do this calculation on a cash basis. That means that you would recognize those receipts when they actually hit your bank account, when they actually show up in your bank. So bank statements could be a really, really good way to show that reduction if you are a cash basis taxpayer. If you're not a cash basis taxpayer, you're probably going to have to show your actual financial statements on a quarter by quarter basis. So probably something out of your QuickBooks or whatever you use as an accounting software in order to show that quarter over quarter reduction. If you're getting a loan for $150,000 or over, you're going to have to show that when you apply for the loan. If you're getting a loan for under $150,000, you don't have to show that proof when you get the loan, but you do have to show the proof when you go for forgiveness. So you probably want to make sure that you have it, but that could be a good caveat for people who know that they're down at least 25%, but maybe want to wait until they actually file their 2020 return. Then you would have that likely by the time you went back to actually apply for forgiveness. Now, a couple of things that are still the same. It could be advantageous to go through the exact same lender you got the first round through because it could actually reduce the amount of paperwork you have to give, right? So that's something that you want to keep in mind, is that could actually reduce it if you go with the same lender. Not all the same lenders are going to be offering the second round, but for those of you who did get a first round, you might want to go through the same person that you did in order to expedite the process for you. Also, similarly, you're going to have 2.5 months of payroll. That's what you're going to get from your second loan. So if you got that amount last time, it might be the same amount. Now, you can actually use 2020 if you want to. You have that choice. You can use what 2.5 months is of 2020 or of 2019. If you use 2019, it should be the exact same thing that you got last time. You probably want to pick the one where you had more payroll costs because that's going to get you a larger loan. But remember, just like before, you have to be able to spend at least 60% of that on payroll. That's what you need to spend to get it fully forgiven. The rest of the 40%, though, you have a lot more latitude than we did previously. Now we can actually use it on more broad operating expenses in your business. So that is not just limited to the rent and utilities that it really was last time. Now software costs. If you got PPE to protect people in your business, a lot of other just regular operating costs that you have would be covered. So it makes it a lot easier to make sure that you can get to that 40%. But remember, you also get 8 to 24 weeks. So anytime in between, you're going to be able to pick. So previously, you had to pick either 8 weeks or 24 weeks. The new bill changed that. Now you pick any time between 8 and 24 weeks. What that means, though, is it always starts when you get the money. That's the start of the clock. But you can stop the clock anytime after 8 weeks. So if you spend it all in 12 weeks, you can stop the clock then. And that is when your typical covered period would be. That's new. And that also applies back to the first round. The other thing that applies to the first round is being able to use it on more things. So if you have not gotten your PPP loan forgiven and you potentially weren't going to get it all forgiven before, that could help some of you. Now, one quick thing to point out too, restaurants or anybody else that's NAICS code 72, you guys actually get 3.5 months worth of payroll. So everybody else gets 2.5, but you're eligible in the second draw for 3.5. So really quickly, I'm going to go jump into the calculator that I made for you guys to help you see whether or not you're going to hit that 25% reduction, just so that you can see what it looks like and get an idea. You can always go download it for free at jamietrull.com/PPP calculator. Okay, so right now we are looking at the eligibility for PPP Second Draw calculator. And you can go ahead and download your own and follow along if you want to. But ultimately, we're going to start by putting in the quarter that we started our business. So either you're going to pick Q2 2019 or before. So even if you were in business since 2015, that's the one you would pick. Or you'd pick Q3 or Q4 2019 or Q1 of 2020. If you were not in business by Q1 of 2020, specifically February 15th of 2020, you are not eligible for a first or a second draw of PPP. So it's got to be one of these three. So in this case, let's say that we've been in business for a while. We're going to select that. And it's going to tell us right underneath exactly the steps we need to do in this worksheet. And this is going to say, go to step 1, then step 2A. So step 1 is to see if your full year has a 25% or more drop in revenue. You can skip this if you want to go directly to the quarters. Maybe you already know that you don't have a full year drop, but it may actually make matters easier if you could just use the full year. So let's say in this case, our 2019 full year revenue was $100,000. And then we come over here and our 2020 revenue was, let's say we came in around $70,000. So in this case, you can see it already says we qualify for a PPP second draw and we don't have to go to step 2 because our revenue dropped by 25% or more on a full year basis. Now, let's say that wasn't the case. Maybe we made $80,000 this year and it was 20%. So now it's going to send us to step 2. So in this case, remember it said we go to step 2A. So option A, if you started your business before Q3 2019, use this table. That's us. We've been in business for a while. So we're going to start to put in our revenue by quarter, okay? So in this case, we actually wouldn't have qualified quite because we didn't have quite enough drop by Q2 and Q3, but by Q4 we did. By Q4 we had more than a 25% drop, so we would qualify for that quarter. And if any of these cells, if any of these quarters count, then you qualify in total. So ultimately that's how you're going to calculate that out. Now, if you weren't in business before Q3 of 2019, you're actually going to use one of these other tables. So you're going to go through a pretty similar exercise. It's just the fact that the calculation is a little bit different. So in the case of starting a business in Q3 or Q4 of 2019, you can actually use Q3 or Q4 of 2019 versus any quarter in 2020. It doesn't have to be the exact same quarter. So that's what this is going to show you. And then coming down to option C, in this case, if you were in business in Q1 of 2020, it's going to compare Q1 of 2020 versus the other 3 quarters to see if you have had a 25% drop. So this will kind of walk you through it though. Depending on what you choose up here, it'll tell you exactly which steps to use and to calculate. So hopefully this is helpful in figuring out whether you qualify for a second draw of PPP loans. Now, make sure to subscribe to my channel, write me a comment and say hey, because I've always got new content coming out on all of this. So I'm putting out content all the time on PPP, on EIDL, on unemployment, on all things that are really impactful to you as a self-employed person or a business owner. So make sure to follow me and I will see you next time.